Good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Friday, August 31st, 2018, the last Friday of summer, heading into the holiday weekend. I hope everybody has a great one. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. Sign up to receive PowerFeed for free, www.chaikinanalytics.com/PowerFeed TV. U.S. equities were weaker in Thursday's trading as trade concerns with China were in focus. Treasuries were stronger across the curve. The dollar was down against the yen, but better against the euro. Gold finished down about 0.5%, and oil was stronger with WTI settling up over 1% to close over $70 a barrel. Breadth on the New York Stock Exchange was negative 1.8 to 1. Breadth on the NASDAQ was negative 1.3 to 1. Outperformers were utilities, healthcare, and consumer staples, while materials, financials, and industrials underperformed. As we get to the desk this morning, futures are down 20 basis points after a weak session in Asia, and Europe is currently under pressure. Treasuries are slightly firmer, and the dollar is mixed. Turkish lira is actually moving higher. Gold down 60 basis points, and oil giving a little bit back, down 30 basis points. So, we're still trading at the all-time highs. Going to kind of reverse here a little bit this morning after selling off in the afternoon after President Trump said he was going to go through with $200 billion in tariffs on China. Still some concerns about Canada and Europe as well. So trade back in focus. I hope by now we've learned to kind of ignore these headlines. They tend to cause short-term disruptions. Let's follow price. Let's follow the fact that the market is strong, the economy is strong, and earnings are strong. And we are, in fact, trading at all-time highs, and those all-time highs are confirmed by momentum. Support comes into play at 2873, 2800, and then 2726 to 28 is, the 200-day moving average. We'll call resistance, round number resistance, 2900 to about 2920 or so for now. But, we need to set a resistance level. We're trading at all-time highs. RSI is in bullish ranges. Like I said yesterday, it became overbought, so that was encouraging, and Chaikin money flow remains bullish. So all things being equal, there's not a lot to say here in terms of the strategic positioning. We want to be involved in equities. We want to isolate the strongest parts of the market and the best stocks within those industry groups and sectors as the market is in an uptrend and has broken to new all-time highs. Your market in a minute. What I'm talking about today, it is Friday, so I look at a lot of the key relationships that can kind of clue me in on how the trend is going. But, markets are moving lower on trade concerns. Fine, we talked about that. Futures are down slightly this morning. FANG stocks, the market generals, trading your all-time highs. We'll take a look. Small caps are actually trying to find a relative bottom. Semiconductors do remain a concern for me on a relative basis. And like I said, futures do point to a lower open. When we check out the power bars, though, picture hasn't changed all that much. Still skewed to the bullish side. Dow 8 to 3, S&P 500 128 bullish or very bullish stocks for 72 bearish or very bearish stocks. Nasdaq 33 to 12. Small caps, just ebbing and flowing, if you will. Power bar ratio is deteriorating a little bit for small caps. Although I will note that in a down tape they did outperform yesterday, so let's keep an eye on that. Bonds upticked by 22 basis points, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, and the major indexes are mixed. PowerFeed subscribers every day, stock of the day in your inbox. Worth it to sign up for that alone. Today's stock is Chatham Lodging, ticker symbol CLDT, comes to us from the real estate group. That's one where I've been watching for a relative bottom. Very bullish power gauge rating, closed at 2177 yesterday, down 18 basis points, and the power gauge rating is very bullish due to very strong price volume activity, attractive financial metrics, strong earnings performance, and some positive export activity. So when we roll it all up, the 20 factors that are within these four buckets, we get a very bullish rating. So when we have a very bullish stock with a strong trend and a strong industry, we know we're hunting in the right area, fishing in the right pond, call it what you will. Ribbon at the bottom of the screen tells us where the power gauge is and where it's been over the past 12 months. We're currently on that very bullish rating. Market agrees with the model. I'd like to see it agree with it a little more intensely, but right now it's a very bullish stock that is outperforming the market. Bullish money flow, above the rising long-term trend line. Only real hiccup here is that we're overbought. Let's look for consolidation in the $21 to $22 range to work off that overbought condition for CLDT before setting it up as a long idea. CLDT, very bullish stock in a group that I'm looking for a relative bottom. I want to just see it kind of go sideways here a little bit, work off that overbought condition. If you're a pattern person, maybe picking up a little bit of a shoulder, head, shoulder, a head and shoulders continuation pattern with a breakout trigger at $22 if that's how you trade. But this one's overbought. It's not going in the portfolio today. It's going on a bullish watch list. Sector movement over the last 5 days, tech, discretionary, comms, and materials. You can see the cyclical nature of leadership as some of the defensives have given back, in particular the staples. I've been talking about it. I've called the staples trend, counter trend in nature, that rally counter trend in nature. I've been wanting to fade it. That's been a good trade. Tech, 26% of the market for now. At the end of September, we're going to get the new comms group in place, and tech will have a lower weight, as will discretionary. But right now, leadership is where you want to see it. Tech, discretionary, comms, that's where we want to see leadership. The staples, the utilities are at the bottom of the list. I'd like to see a little stronger performance by the financials, but realistically speaking, with interest rates kind of spinning their wheels and churning in the 2.8 to 2.9 range, there's not a ton of reason to get excited about financials here and now. Real estate starting to move up. That's one that's been on my list. Our industry in focus is actually one that's kind of interesting to me today as well. You know, every Thursday and Friday, I in my note to Chaikin Analytics subscribers, I select an industry group, do a little bit of a deep dive on it, and pick a stock from there. And I was toying with insurance today. I didn't go with it, but I was toying with it. And this one's kind of interesting to me as potential new strength. Why is that? Because we have a power bar ratio that's skewed in favor of the bulls, 17 to 4. But over the past 6 months, this subsector has underperformed the S&P. So we have a very strong power bar ratio, which points to future potential. This could be an emerging group on the long side. It's currently ranked number 6 of 21 subsectors, and it has moved down 4 slots over the past week. Some of the indicative names there: Allstate, ticker symbol ALL, Genworth, ticker symbol GNW, and Aflac, ticker symbol AFL. Let's take a closer look at Allstate today. Very bullish stock, strong trend, strong industry. Not yet outperforming the market. However, look at how intensely it was underperforming the market, and that intensity has diminished. If you're on the aggressive side, I say you can get involved here. If you're a little bit more conservative, you want to maybe wait for that outperformance to really manifest, then you can wait. But if we take a weight of the evidence approach, we have a very bullish stock with a strong trend and a strong industry. It's oversold with very bullish money flow. Breakout above the $98 level, above the rising long-term trend line, following a positive catalyst of an earnings upside surprise. I can't fault you for buying Allstate here. I think if you're a little bit on the aggressive side, you want to take you want to put on, call it a starter position. The way I would come to this one is I'd put on half my size here and watch it. And as the stock begins to outperform the market, put on the rest of my position. But I think you want to have some in Allstate here and now, as you have a very bullish stock that is starting to move to the upside in a group that looks like it's emerging as potential leadership. Keep an eye on Allstate. Yesterday's S&P 500 movers, H&R Block up about 4% on earnings. Micron up nearly 2%. Micron's really been going nowhere for the past few months. Obviously, it gets a lot of attention. I think what happened with Micron is it was just not this past earnings report, but the one before that, the 1Q report. This stock was just massively over-owned. And I think what you're seeing is a turnover in the shareholder base, and that could be healthy if the stock doesn't break down. I think you want to keep an eye on Micron, but it's a neutrally rated stock. So, listen, there's better opportunities out there. Abiomed up 1.6%. Perrigo up 1.6%. So the gainers all neutrally rated stocks. Maybe you want to play with them. Maybe you don't. I tend to think that there's better opportunities out there. On the loser side, Dollar Tree. Street didn't like what they had to say on their earnings report, down 15%. EA pushes out the launch of a new game. Thus, they had to adjust their guidance lower, so that takes 10% out of the stock. DVA is a healthcare machinery stock. DaVita, they also run, it's a services and equipment stock. That's been a hot group, and this stock's down 9%. No reason to touch it. And just like Western Digital yesterday, WDC was a large cap tech stock that was down. Seagate, STX, same group, down. Neutrally rated stock, strong tech tape. I think what the market's telling you is that hard disk drives are not where you want to be if you want storage exposure. The world is going to flash. The world is going to solid state drives. Western Digital and Seagate need to either reinvent themselves, make an acquisition, or do something, but neither one of those stocks looks enticing within a strong tech tape. Earnings update, Lululemon beat by 22 cents. That stock is trading up about 11% in the pre-market. Dollar General beats by 3 cents. Dollar Tree misses by a penny. So what you have here is our three retail names that kind of really talk about what I've been saying this week. You have to crush it. Lulu beats and guides higher. That stock goes up. Retail names that beat but kind of have dicey guidance get hit, and if you miss, forget it, right? I mean, it's just, look, Dollar Tree missed 15%. While retail is strong, and I am a believer, you do need to be selective. There are winners and losers. This is not an example of let's just ride the retail wave. So let's kind of get into the key relationships that I look at. On Fridays, I look at some ratios and relationships within the market that give me a clue as to how the trend is likely to evolve. And obviously, we want to keep an eye on the generals, and the FANG stocks are the generals: Facebook, Amazon, Apple, Netflix, and Google. This is an index that I put together that encompasses these names. And let's just use the word textbook uptrend, confirmed by momentum. Notice that throughout the past 2 years, this index has not been oversold since November 2016, right? Solid uptrend, trading to all-time highs. The generals are leading the market. A lot of the breadth bears are going to tell you that this is concerning because these are the only names that are leading. But remember, look at the advanced decline line if you want breadth. It's at all-time highs also. Your large caps are leading. That's fine, but participation is there. Don't get fooled by the bearish breadth narrative. That's how I'm looking at the world. Small caps, trying for a relative bottom. We look at this chart a lot because I think it's important. And this is the IWM, the iShares Russell 2000 ETF relative to the S&P 500 ETF. We're still above the 200-day moving average. That's fine. The absolute trend is moving higher. That's encouraging as well. And I think the only concern now is just that we're underneath. We've broken support and we're having a hard time getting back. But we are in fact looking for or trying to bottom here. I think we need to keep an eye on small caps from a risk sentiment standpoint, obviously, and also a breadth/participation standpoint, because it just speaks to the amount of stocks that are participating in the uptrend. And look, I'm not going to fault anybody for being long IWM. The fund is in an uptrend, but on a relative basis, I just want to see it begin to outperform before I get really more aggressive. And when I write my morning note and I select a stock every day, this informs where my stock ideas are going to come from. If small caps are underperforming, then I'm going to skew my stock idea to the large side, and vice versa. When small caps were leading, I had a lot of small cap long ideas. So that's how I use this metric, and I think it's helpful. It informs my view on the market in general, but also helps with stock picking and stock selection. But this is the one that concerns me. This is the relationship that concerns me the most in the market right now. This is the semiconductors relative to the broader market. And you can see, again, if you're a pattern person, you want to call this a head and shoulders, fine. Potential false breakdown here. This is what I'm watching, but we're below the 200-day moving average. We've had a series of lower highs in the RSI. The RSI has now shifted into bearish ranges. This is the RSI of the ratio. If you want to draw your trend lines, you've broken it. No matter what way you slice it, relative weakness is here for the semiconductors, and that is a concern. This ratio, the black line, is highly correlated to the market, over 90%. Correlation is breaking down here a little bit, so here's the question we need to answer. Are semis going to begin to outperform to catch up with the market, or is the market going to begin to turn over to confirm what we're seeing in the semiconductors? We're watching. This concerns me. Right now, the market's ignoring it, but I think we need to pay attention to it, at least have it on the radar when it comes to how aggressive we get. So I hope everybody has a great holiday weekend. Sign up for PowerFeed. See you next week.